Hey traders, welcome to the YouTube Live. This is the version 2 of the BNB paired with USD short. I don't know what happened to the first one. I guess it was just straight blank when I was kind of cut out halfway. But anyways, this is the volume 2. Let's give it a go and see what happens midway through. So breaking it down from the bigger time frames to the smaller, we'll first go over the daily, and this is at the entrance, so you won't see the move that happened after. It hit our stop loss very shortly after. We only had a feeler position in there. A feeler position is 10 to 30% of the actual total size of the amount of capital you want to put into each trade, and it's kind of like testing the waters and putting a smaller position in before you actually put the main position when you have total confirmation and conviction that the price is going to go in your intended direction. So first, starting off with the daily, let's just talk about the flow of the market right now. We see that on the bigger time frames, we're making lower lows and lower highs. So this is a high, this is a lower high, and this is a lower high. And then previously there was a high or there was a low, and this is a lower low, and then this is a lower low. So we're making lower highs and lower lows, and we are at a very key level of resistance. Where we currently are, and we see a lot of wicks protruding above our bodies of the candles all here. A lot of wicks coming above the bodies of the candles, and then we also see it's a very strong level of resistance right here, which signifies that this is a strong zone within the chart. We do have a wider range because this is the next key level of support we can see because of the wicks, but overall this current resistance at $8.50 to $8.70 is a pretty strong level within the chart. So now that we've identified our horizontal zones, we can then talk about potential areas on the 4-hour. But first, quickly talking about our take profit zones, we see that this is the main area of demand. What our plan was to take profit at the 2-to-1 risk reward, 25% off right there, and then we move our break even, or we move our stop loss to break even, completely eliminating risk off the table. And then what we're looking for is for the second level of take profit to be hit. We would then be taking 50% of the position off of the table, leaving the rest for our third and final take profit area. And this is a key zone. We can see previous level of resistance, support, support, resistance, and then a support again right here. And then if the price does break this zone, it would confirm the double top, and then we could potentially see a nice entry of a pullback, validating this area as a new level of resistance. So that was the overall plan. That was the idea for this short. And if the price comes back down and we have to adjust our ascending trend line, so be it. We'll take another shot at it, because if the market sentiment does move to the downside, I definitely think that we could have a really good hedge at play. I'm not saying we don't have any longs. We do have longs within the market, but for a setup as good, in my opinion, as this, it could have been better. It could have had more of a confirmation, breaking a level of support within the market. But overall, putting a feeler trade in this position, I thought was a pretty good setup. So now let's go to the 4-hour to discuss the actual setup move and what we were looking for and what occurred. So let's get our snip again and then discuss the key trend line that I was looking at, which was this zone right here. This is the anchor point, and then we see one touch, and then we see many touches here, a lot of type A's. All here, it's a key level of support, and then we get another validation right there. We also get another validation right there, and then we start to see these lower highs form. So we see this right here as well. So this is a high, and this is a lower high, and this is a lower high. So it's squeezing the price, having the price make a decision to either go to the upside, breaking the resistance, or go to the downside and break the support. And whichever way the price breaks is going to be the shift in confidence in the direction that the price may continue to trend in. And in this situation, we saw exact same thing, where the price, we could put it here, and then we could put our trend line here. So we saw the price make a high, and then a lower high, and then a lower high, and then we were hoping that this previous level of support, new level of resistance, will create that next lower high, which will then bring the price down below our strong level of resistance right there. So that was the structure that we were looking for on the 4-hour, and we will zoom in here just to talk about this in a little bit more detail, going over it again on the bigger time frames here. So talking about structure. Structure is very important in markets, and we really emphasize understanding higher highs and higher lows and all that stuff. So we see the high here. So we're making higher highs and higher lows. This is a high, this is a high, and this is a low, this is a higher low, this is a higher low, and this is a higher low, this is a higher low, this is a lower low than the low right here, but we do make a higher low right there. So overall, it does look like a pretty healthy trend. And then we're making and breaking those highs to make new highs, and it looks pretty good overall. And then once we start to see that price test this key level of supply, then we get those rejections, instant rejection from here. We do get the price to break above the zone, but soon after, we get the sellers to come right back and push the price below the area. And then we see that massive wick to the downside, or back down to the downside, closing below the open, which is a very, very bearish, significant move on the 4-hour chart. So we see a lot of sell pressure within this area. We see right here, we see right here, we see right here, we see that massive wick all the way down here. So overall, it does look more bearish. We can really identify that. And then we're also seeing those lower highs form. Like we said here, this is a high, this is a lower high. This right here is a lower high, and then it held that lower high right here and then push the price down below our significant level of ascending support, which is this guy right here that we've been holding for a while. So it pushed the price because it had to make a decision. Like many times before within the chart, there was a squeeze. The price had to make a decision because there were lower highs coming in and there were higher lows coming in. And this is the apex of the pattern, and the price went to the apex, had to make a decision. What did it do? It made a decision to go to the downside. And then what are we looking for? We're looking for price to hold previous levels of support and turn them into new levels of resistance. That's what we're looking for on the hour chart, which is our execution price. So our execution time frame, I should say. So in this circumstance, what we saw is a minor level of, was a really bad line. We got a minor level of support right here, previous level of support, new level of resistance. And if we continue that a little bit further out, we do see that it's a significant zone. And if we continue that even further, all the way to this area right here, it is a pretty significant zone within the chart. So that's what we were looking at for this entry. And then looking at the 4-hour, we did see the 1-hour double top. So like we saw the two tops there with two areas of sell injection coming into the market. We did not see the price break our little level of support, which would have been the double confirmation within this pullback. But that's why we entered a feeler and we didn't enter our full position. So still on the 4-hour, still talking about it. Let's just get our pen there. So we got to push to the downside. We don't want to enter on the ending of the push, breaking a key significant zone. We want to enter on the exhaustion or on the pullback, and that's what we were looking for. So once we saw that push to the downside, we were interested. We had our eyes on this chart, and then we did see a nice support right here that the price was holding. So it was really in a range here, bouncing from support to resistance, and then once we broke the ascending support, we then looked to potentially make a short from here. So we were looking for this. Oh, sorry. Missed that support there. So there is our support. So what we were looking for is from this high, we'd bounce here and then we'd push down and then we'd touch that support, come up. That's where we'd enter, and then we'd make the push below the support. We'd even see a pullback, but then ideally we'd like to see that 25% and then our stop loss now to the break-even point, and then we'd hopefully hold this level of support around here, and then we'd make our move to the downside, hitting our key level of demand. So that was the outlook that we were looking for. And looking at the next couple candles, clearly that did not play out in our favor. So let's have that replay still come in, and we entered at this point one less candle. So let's just jump one less candle. So this is exactly where we entered, was on the 1-hour candle closure of the double top doji, the bearish doji candle. And let's just zoom right in and discuss why we entered at this exact particular situation. Let's just move it out a little bit more so we're not taking up the whole screen, but I still want to see those lower highs form. So why did I enter right here? Well, we see a high, we see a lower high, and this looks like a pretty good spot for a lower high. And then we also are not just entering right when we see the initiation of the sell pressure come in. We're looking for a double confirmation, kind of like we saw here. just in this example right here, we see our first injection of buy pressure right here, and then we see our second injection of buy pressure right here, and then this is going to be our third injection of buy pressure, and then we see the sell pressure come in as well. But we see that the price is holding this level, and then once we're able to break it and to hold it for a new level of support, we get a little push to the upside. Obviously, this is like a very small area on the chart, and we need more than just one area of confluence to determine which way we should enter. But overall, we do see the first wave of sell pressure come in right here, pushing the price down, and then what we were looking for is a little pullback to then potentially double top, and we're looking for that extra confirmation that there's going to be sell pressure within the market. And once we saw this bearish doji candle, which is an indecision in the market, we saw the price come up here, but it closed bearish, coming back all the way back down below the open of the candle. So for me, that was enough confirmation that I could put my feeler trade in, and then what we were looking for was a potential break of this zone right over here, because it was from a previous level of resistance, new level of support. Once we break it, we'll get that nice, let's just make this a little bit cleaner so you really understand what we're looking for when we're looking for a double top. So we get a nice level of support here. So we're looking for a top, second top, and then a break. We could just see a breakdown and we were enter here, or we could see a nice little retracement come, retest this zone for a new level of resistance, and then break down. But either way works for us, and that would be where we would enter the rest of the position. This red doji candle did for me signify that there was sell pressure within the market, and that's why we entered a feeler position. And then once we saw the break, then we would look to enter around that zone. So that was the structure that we had for our entrance, and it's just following a basic set of rules that we are abided by the system that we use. So let's just draw in a little zone, which is this guy right here. We see it was respected pretty well all around here. You can even make it a little bit higher up, like so, maybe so it encompasses that top of the wick there. So that is what I was looking at, and then we can also put a second one. We can also put a second one just below it, which is going to be this area right here. And that was the structure, basically, is I was pretty confident in that one. Obviously, you can only look at a series of trades. You can't look at any single trade. But overall, that's pretty darn solid. We could get a push, pullback, push, something along the lines of that. I was definitely pretty confident in that entry with the entrance at the completion of exhaustion, looking for the sellers to come back in, which we saw double top. We saw first injection of sell pressure, and then our second with a bearish doji candle, and then we entered. Pretty good risk reward overall, and we don't really have much more to discuss. We'll just basically go over what happened after. We got our first candle, we got our second candle, and then we got our initiation for the massive move to the upside. Boom. Hit our stop loss. Oops. Let's go back here. I guess that's not wanting to go back. It was somewhere, I think, just above here. I'll look at it in a bit. So that was a pretty good risk reward in terms of where the potential was. I was definitely looking for the demand zone. This was the risk reward of 2-to-1, but it happens. Not going to sweat about it. That happens in terms of, as a trader, you have to have the ability to not look at any single trade and have any emotions behind it, in a way where you have to kind of distance yourself off from any single trade and just have the ability to look at a series of trades instead of a single trade in itself. So hopefully you got something from this. I think a better situation for us for an entry, or a more conservative high probability entry, is if we did see the price break this zone and then retest for a new level of resistance right here. Then that would have probably been the highest probability entrance for us, because we were still kind of holding that level of support there, kind of within that consolidation. We could even put that consolidation here and just take away the mid-range zone. So that still could have been within the consolidation totally, and that would have been probably a higher probability trade, but then the risk reward would have been less ideal. And overall, happy about that entry. I can't complain. I thought that was a pretty good overall structured setup. So hopefully learn from this. Definitely a really good way to get better as a trader is to learn from other people's mistakes. And I don't really classify this as a mistake because the things checked off in the list of things I need in order to enter. And unfortunately, stuff like this happens. You take the loss, you put your stop loss in every single time, and then you move on to the next one. So if you have any questions, leave them in the comment section below. And like always, happy trading, and see you next time.